I know you're coming off a long week of meetings there in Washington, World Bank and IMF. One of the things I think we learned is we don't only have inflation in the United States, it's sort of a global phenomenon. But talking about the United States specifically, we know your old shop, the Federal Reserve, says they're going to do everything in their power to try to get inflation under control. What are your projections, though, given what you expect maybe the Fed might do? What are your projections over the next 24 months, not just this year, for growth in GDP and for inflation?
Well, you know, the IMF just issued its most recent World Economic Outlook, and they're projecting growth this year of over 3% for the United States, which is, given that we're almost fully recovered from the pandemic, is a good, strong performance for the United States and consistent with a labor market that will remain very strong. I think, you know, judging by the U.S. unemployment rate now and other measures of the performance of the labor market, it's been decades since we've seen such a strong job market with such excellent employment opportunities for people. You can see that in the high quit rate and the enormous level of job openings. So, you know, the Fed is concerned about inflation. They've made clear that they will be removing accommodation to try to get it under control. But I know they'll try to achieve a soft landing, and with some skill and some luck, we'll have a very good year for the U.S. economy in terms of the job market this coming year.
So are there things, I know that it's the Fed's job, it's part of their mandate to really control prices, and that's their job, and I know you really respect the independence of that organization that you ran. But are there things the administration can or should be doing? And let me be very specific. There's a Peterson Institute study out this week that says that if you took off the so-called Trump tariffs, that would reduce inflation right away 1.3%. I know that's being studied, but inflation is here and now, and it's been coming for a while. Why don't you just do it?
Well, we want to do everything that we can to lower inflation, and the president has announced an unprecedented release of oil from the Strategic Petroleum Reserve that is serving to hold down oil prices. I think gas prices peaked and have now come down some from their peak. We're working very diligently on supply chain issues to get our ports working better, and we're doing what we can to bring down inflation, so that's very important. You know, we're re-examining carefully our trade strategy with respect to China, and you know, I think it's worth considering. We certainly want to do what we can to address inflation, and there would be some desirable effects. It's something we're looking at.
Madam Chairman, Madam Secretary, forgive me, I forgive your new job. Madam Secretary, you mentioned China. Let's talk about China, because you referred to that in a speech last week before the Atlantic Council, basically saying you really wanted China to really help the United States bring pressure to bear on Russia to stop the travesty that's going on right now in Ukraine. What can the United States do to more than just jawbone or persuade and actually get things done? And let me be specific. What about secondary sanctions? Could that really urge the Chinese to move in our direction?
Well, look, I don't see China at this point as undermining the impact of our sanctions. As far as I can tell, Chinese financial institutions are avoiding, they very much value their access to the U.S. financial system, to their economic relations with the United States and Europe. And I'm not seeing them as taking steps to undermine sanctions. We've made clear that that would be unacceptable to us, and made clear that it would be unacceptable to help Russia add to its stock of arms to conduct this war. We would like to see them do more to take advantage of their relationship with Russia to try to bring about a diplomatic end to this war. Nothing would be better for the outlook for real growth throughout the global economy or for inflation other than stopping this war. And, whenever we put, you asked about secondary sanctions, whenever we put sanctions in place, any country or institution that provides material support to a sanctioned entity to evade those sanctions, we would look to sanction ourselves.
Madam Secretary, help me understand this a little bit, because you say you don't see any indication that they're undermining. At the same time, we had a senior Chinese government official this week say we really do regard Russia as our friends, and as proof of that, our trade with Russia has actually increased by 20% so far in 2022. Doesn't that undermine the sanctions?
Well, we haven't sanctioned Chinese trade with Russia. It's natural that, for example, with the price that Russian oil is receiving in the global market, it's below the price of Brent, that there would be some incentive for China or other purchases to want to pick up their purchases. So I don't know if that's happening, but it could be happening. But that I wouldn't regard as a violation of our sanctions.
Madam Secretary, you also spoke out and called for, I think you said, modernization of some of the international financial institutions that have been meeting this week in Washington. And I'd like to pursue that a bit. Bretton Woods, as we refer to it. Certainly the world has changed since 1945, no doubt about it. And the Russian invasion of Ukraine has brought that home, but there are more fundamental changes, particularly in the rise of China. Are you talking about some minor tinkering around the edges, or is it time to really revisit the fundamentals that were formed during Bretton Woods?
I'm not sure I want to say the fundamentals. I think the goals of each of the institutions are appropriate, but the world has changed in very significant ways, and I think that does require a rethink of the organization and some of the specific mandates that we give the IMF, the World Bank, and the WTO. The IMF was originally designed to deal with country-specific balance of payments problems, to help countries adjust and to help finance them during a time when they have limited access to global borrowing. And, the last three crises that the world has faced have been global. There have been massive external shocks, the pandemic, the global financial crisis, the Russian war against Ukraine, that have caused many countries to simultaneously face problems. And, we really need to rethink the ability of the IMF to respond to these global shocks. In the case of the World Bank, we have a need to address global public goods. We've had influential reports written since the pandemic telling us that the world is not prepared. We have a window, but the world's not prepared for the next pandemic. I see the World Bank as potentially playing a crucial role in arming countries with the public health resources, testing, vaccine development, the things that would be needed to respond quickly to a future pandemic threat. And really, the World Bank was set up to do project-specific lending. We're devising new trust funds and other programs to try to address these needs. But I think maybe a more fundamental rethink of the mission of the World Bank's appropriate. Also with respect to climate change, we see clearly a need to deploy huge amounts of private capital. Public capital will never be enough to deal with infrastructure and climate change related needs. And so would like to see all of the multilateral development banks play a key role in figuring out how to make it safer, really, for private lending to take place to address these needs. To get the scale we need in addressing critical problems.
Madam Secretary, one final one. You've had a long and distinguished career in public service. You've accomplished an awful lot. I'm not going to ask you how long you're going to be there because a lot of people hope you'll be there forever. But what are your priorities to make sure you get done before you step away?
Well, I've really wanted, of course, my first priority is the American economy and to see the American economy thrive. I've been very pleased to see the rapid recovery of the job market from the stress it suffered, the huge toll of unemployment after the pandemic. And of course, we need to get inflation under control. Longer term, I want to see us build the supply side of the U.S. economy to have a fairer and greener future in store for Americans. I'd like to see investment in people, investments that would make it easier for particularly women to participate in the labor market, and to really help children, make sure that every child born in the United States has an opportunity to thrive. Globally, my priority is to rebuild our partnerships with our allies, to attack problems that all of us confront jointly. I feel pleased that we were able to agree on a global tax agreement that can stop a damaging race to the bottom that has been going on for decades now with respect to tax rates, corporate tax rates, that's been depriving countries of the resources that they need to rebuild their infrastructure and educate their people. Want to see us have strong partnerships to address climate change, which is an existential threat. And really, Russia's unprovoked attack on Ukraine, if anything, is served to greatly strengthen our alliances and our appreciation for the value of cooperation. That's a key priority for me.